Hello, Adam Gower here, and I build digital marketing systems for real estate professionals so you can find more investors, have investors coming to you, raise more money, and do more and bigger deals. Find out more about that at GowerCrowd.com. And today, welcome to the GowerCrowd Podcast, syndication in the digital age, with my guest, Soren Godbersen, who is Chief Growth Officer at Equity Multiple. Now, Equity Multiple are one of the top 10 crowdfunding platforms. I am frequently asked, who are the top crowdfunding platforms? And there are a lot of them. Many of them come and go. But Equity Multiple has been around for a while. And in a review of reviews that I conducted late last year, they showed up as being in the top 10. So definitely a platform worth going to visit. And when you hear Soren today, you'll understand exactly why. In fact, check this out. One of the things that he and I talk about today is the importance of education. So if you're looking to raise money online, pay attention, right, to what Soren says. Education is the core of how you develop a relationship with prospects and how you convert them into being investors in your deals, right? You can do that entirely automated when you digitize your whole process, right? So anyway, that's stuff to look forward to in today's episode. And if you do want to raise money and do bigger and more syndications, then that's exactly what we do here at GowerCrowd.com. Go to GowerCrowd.com to find out more and use the contact page to reach me directly if you want to do that, or at minimum, subscribe to our newsletters that cover the latest updates from the commercial real estate crowdfunding world on Wednesdays, and we also have a newsletter that goes out on the weekends that is, of course, strictly educational, right? Plus, while you're there at GowerCrowd.com, check out the show notes page for today's episode, where you will find links to Soren and to Equity Multiple, and to learn more about him and what he does. All right, so now it is my great pleasure. Really enjoyed my conversation with Soren. Here he is, Soren Godbersen, Chief Growth Officer at Equity Multiple. Soren, what a pleasure to meet you. I do love Zoom. I have to tell you that. You know, for the downsides, all the downsides of COVID, one of the upsides, you get to meet people that you never would normally because they're halfway around the world, meaning you're on the other coast and I'm over here. It's fantastic to meet you. Chief Growth Officer at Equity Multiple. And I'm going to jump in with the one question that I really, really want to hear you answer. And then we'll find out what a chief growth officer does at Equity Multiple later. But my first question is, what characteristics do investors like to see in the developers on your platform? What are the most important things that they want to see?
Sure. Well, first of all, I'm delighted to be with you today. And yeah, Zoom is one of the bright spots of the world we find ourselves in. It's a new way of doing business and being with people. So I'm delighted to be with you today, and yeah, happy to speak to that. What we find with our business, and also with respect to the developers and sponsors that we partner with, is simply that communication is the most important thing. Communication and transparency. So, we find that investors, our network of accredited individuals, would so much rather hear bad news than no news whatsoever. So I think it's just being forthright. It's communicating at a regular cadence, and even if it's construction delays or challenges with permitting or whatever, investors simply want to know that you're there and that you're working on their behalf. So that's the number one piece of advice I would give. Aside from that, I think that investors really want to know who you are. So if you can ensure that your reputation online is sparkling to the extent that you can, and that you have a track record that's well presented, that's all to the good as well.
So let's talk about that a little. I am actually fascinated that you should say communication. We just ran, as being the number one thing, we just ran a investor survey, 40,000 investors. We did a survey, and I did some one-on-one interviews as well. Mm-hmm. And that was, without doubt, and I wonder, let me ask you this, is this kind of a COVID thing, or is this in general? But the number one most important thing that they reported also as being key to their relationship with sponsor was communication. So first of all, is that something you've seen shift more so because of COVID and because people are worried? Or and also, so I'm going to double barrel this question, which I should never do, but that's number one. And then number two, so I don't forget, let's actually, after you answer that, let's talk about different forms of communication and how we communicate. But for number one, is it because of the times you think that that's become more important?
Yeah, that's a good question. I can't put any definite metrics behind this. I would suspect that it is related, just simply, the fact that that anxiety runs higher, I think, among all of us, and certainly including those who are investing in asset classes that they may not have been exposed to previously. So I wouldn't be surprised if it's a factor, but I can say almost for sure that the investor focus on communication and need for communication from developers and sponsors predates COVID. We did a survey. Well, we're pretty regularly doing surveys of our investor network, but I think we've seen pretty much in every survey, which we typically do on a quarterly basis, going back to 2017, communication and asset management, which is really in a lot of ways about communication, are number one and number two as far as what investors are most focused on. And an interesting phenomenon is that we do the typical NPS, Net Promoter Score survey. And so, scale of 0 to 10, how likely are you to recommend us to a friend or a colleague? And, we get plenty of good scores. Occasionally we get some constructive feedback too. And the number one issue, both on the positive side and on the constructive feedback side, is always communication. So I think that is a factor that has really been at the forefront of our industry since the inception of the industry. And I think that is in large part because many of these accredited individual investors, they may be fairly experienced, they may have a substantial portfolio, but in a lot of cases, they are new to the concept of transacting online and investing alongside a developer or a sponsor that they probably have never met. So I think it's just sort of inherent to the business that we're in.
So let's talk about communication, because this actually is the business that I'm in these days, is helping sponsors communicate.
Sure.
When you talk about communication, it's a big topic. We are communicating now. We communicate when we meet in person. So I want to drill down on, let's look at both sides of this, both the best practices and also biggest mistakes that people make. So from a sponsor's perspective, what kinds of communications are there? And I'm going to kind of rattle off a few, but one might be newsletters. One might be email. You talked about deal updates, right?
Mm-hmm.
Specific deal updates. You could communicate via social media. You can communicate via webinars. There's all kinds of ways to communicate. So let's kind of go through that a little bit. You've touched on updates to specific deals.
Yep.
But in that pre-conversion phase, before a prospect becomes an investor, right? Somebody who's just getting to know you, Equity Multiple, or who's getting to know a sponsor, whoever it is. What are the best ways you've seen sponsors communicate? What tools do they use to do that in the best cases?
Yeah, for sure. Part of our business model, part of our value proposition to the thousands of accredited individuals that invest with us is that we're doing due diligence on the sponsor or the developer that we ultimately choose to partner with and with whom we originate investments. But nevertheless, we find that our investors really want to hear from the developer or the sponsor in a lot of cases. So, going back to my point previously, it's obviously critical to communicate the status of any particular deal that any number of investors might be co-investing alongside you on. But in addition to that, I think investors, want to hear kind of the narrative of your firm and what your particular areas of expertise are in development. What markets you play in, what sorts of business plans you typically execute on. So it's really getting to know the full story of who you are as a developer. And I think some of the touch points that you mentioned are great examples of how you can flesh out that narrative. So, newsletters, having an active and vibrant social media presence. If you're involved in the markets where you develop, in a community service capacity or just being visible in the market, I think that those are great things to highlight too.
What about a website? How important is a website, and what components should a website have that investors look to? Right? I mean, right?
Yeah, good question. I mean, I think in just broadly speaking, a more and more digital world, it's important for any business to have a strong and well-designed website. I think that one of the nuances to this is that, like I mentioned previously, the first thing that any of our individual investor customers are going to do when they are considering investing in your project is they're going to Google you. They're going to look you up. So if you are not tightly controlling what sorts of material are present and available on that first page of Google results, then you're doing yourself a disservice. So, having a site that shows up in the first position and followed by that, having a LinkedIn profile that is up to date and looks good, and probably having a Twitter account that is actively managed. Those things can really help you curate what an investor finds when they look up your firm. So I think that's critical to starting off on the right foot with any investor who's considering investing in your project.
And do you find, I want to drill down on it a little bit, because you described, you explained that a strong and well-designed website is important. So I want to talk about that. But before I do that, let's just assume that we're all on the same page about what that means. As a platform, do you find it noticeably easier to raise money for sponsors? I'm putting words into your mouth, which is the wrong way to ask a question, and I'm trying not to. The point is, though, is there a difference between sponsors that have a really killer online presence with tons of education on their website, good social media presence, and ones who have a business card, right, for a website? It's a nice picture and a contact form. Do you notice as a platform a difference in the way that you're able to raise money and the way that investors react in the process of converting them?
So I would have a hard time answering this with a ton of confidence, because, we've seen projects and developers where, for whatever reason, the developer did not have they didn't have a site at all, or perhaps they had a site that was sort of web 1.0, if you will. And, the project drew plenty of interest and filled up quickly. And of course, we've seen the converse, where someone had a really strong site and maybe the deal took a little bit longer to fill up. But I will say that part and parcel of having a strong site and a strong narrative around your firm is displaying your track record and some of the relevant work that you've done in the past in a highly visible way. So I think some of the ways that we've done that within our platform on behalf of developers is to do a webinar, either live or we'll pre-record something and maybe include some video collateral around the project. But basically, we'll showcase what your track record is. And I think that if you're thinking about developing a site to showcase your firm, that's the place to start. So having a solid portfolio of past work that you've done, and assuming that you have achieved strong returns on behalf of investors in the past, then make sure that any prospective investors can find that.
And what about educational content? Now, this is kind of diving a little bit more into strong and well-designed websites. So what about educational content, both for developers, but also the way that Equity Multiple has addressed that? Because I know you guys are particularly strong in education.
Yeah.
Tell me how important that is and why it's important.
Yeah, we are very keen on educational content. It's a pillar of our growth strategy, frankly, and how we hope to attract new investors and how we hope to keep our network of investors engaged and coming back to invest time and time again. And I think that's related to the point I made earlier, which is, this is a new space for a lot of investors. For certain profiles of accredited individuals who are entering the real estate crowdfunding space, they may not have a ton of experience with core real estate concepts at all. If you were to, let's take an example of a doctor who's a few years out of residency, cardiologists, say, pretty high current income, substantial traditional portfolio of stocks and bonds, and they're looking for ways to get into alternative investments. And they may find your firm through Equity Multiple or another platform, but they really need to be coached up on, what even something as simple as what leverage in a commercial real estate transaction means and looks like, or maybe some specifics of the market that you play in. So providing educational content around stuff like that to get newer real estate investors comfortable with what you offer is critical. So we, like you said, we do a lot of that work on the Equity Multiple side, but if there are nuances of the product that you offer, especially if it's in an emerging real estate asset class like self-storage, or self-storage is not.
I was going to say an emerging class like multifamily.
Not emerging, but maybe a little bit more obscure to someone who's newer to real estate, who gets what multifamily is.
Yeah, but I tell you what, sorry, just not to interrupt, but every sponsor has a unique take. It doesn't need to be an emerging asset class. Mm-hmm. It's the way that multifamily. Everyone's into multifamily. What can I say? Right? It's like a flavor. Everyone's like that.
Right.
But every sponsor has a different angle and a different approach. And that's really what makes it unique, isn't it? And that's ultimately what sells a deal, is that unique difference.
Yeah, absolutely. Hate to use the word over and over again, but I think that is part of the narrative that we were speaking of before. Good stories make good real estate investments. And I think if you can put your own spin on, whether it's something as bread and butter as value add multifamily, I'm sure that your firm has a unique approach and philosophy. So I think really teasing that out in educational content and making that available, I think that is another pillar of having a strong digital presence and having a strong website, such that investors can get to know who you are and get comfortable with you.
It's funny you say stories. I remember during the last downturn, and I was doing enormous amounts of divestments for banks, actually, indirectly and directly, of non-performing real estate collateralized loans. And I remember this one investor. He was a hard negotiator, but I'd send him some paperwork, and the only thing he wanted to know only one thing about the deal, what's the story? So he said, what's the story? Just tell me the story of this deal.
Yeah.
And he wanted a story. He didn't just want numbers. He actually wanted to know. He wanted a story. And it's remarkable that you say that, because it really is how you establish a relationship with somebody as an individual, as a sponsor, but also for your deals.
Yeah, absolutely. And, you know, I mentioned our typical strategy of hosting a webinar, and that's really what it is. It's a story. You know, it's how the investment came about. It's why you believe in it. You know, we do have some investors that are going to read every word of the investor packet, and they're going to scrutinize every line of the pro forma, but other investors just kind of want to know, what's the story? Why do you believe in this? And I think if you can bring that to life across different types of media, you know, you mentioned social media, and I think that video content is often a really great sales tool. So yeah, bringing the story of an investment across different media types, that I think can be really effective.
Now, you guys, I've been in touch with you guys for years, actually, since almost the year dot, but not quite.
Yeah.
Started. And your educational content really is first class. So how have you found the best methods for delivering that? How do you do that, right? You land on your, I'm just going to paint the picture a little bit. You land on your website and it's all there behind the homepage. But how do you deliver that? Are you finding that you put it out on social media to drive traffic back? Are you using newsletters? Do you send emails? I mean, how are you getting your educational content out? How are you communicating that to your prospects and to your investors?
Yeah, all of the above. I think the other big syndication channel for our educational content, if you will, is a network of publishers who are dabbling in the space. So, you know, you take your NerdWallets or Motley Fool or Investopedia, you know, more and more educational platforms like that are becoming aware of the real estate crowdfunding space, or, you know, more than that, they're becoming aware that their readers are becoming aware of the real estate crowdfunding space. So it becomes sort of a natural fit for us to get in touch with folks at those platforms and to pick content that we've usually already put together and you know, put through our review process, and that aligns well with their readership, and then syndicate it through those channels. But you know, to your question as to how we devise the content and decide what gets put in front of different investors or prospective investors, you know, this is really aspirational. I wouldn't say that we do a perfect job of this today, but we really just try to listen to our investors and try to take a data-driven approach to finding the right piece of content for the right investor. So, you know, I mentioned the persona, if you will, of that cardiologist who might need an article on debt service coverage ratio, whereas, you know, a different profile of investor might need something a little bit more in depth, or maybe specific to a region or to a specific submarket. So it's really taking the cues that we can to try to figure out what's going to be most relevant to a given investor at a given point in time.
And how do you do that, Soren? Are you employing SEO strategies, or is this based on your surveys, or how are you establishing these content ideas?
Yeah, it's both of those things. So we're seeing where there's query volume. So it's, you know, maybe 1 month there's only 50 searches for, you know, what is mezzanine debt, and then, you know, 2 months later it's at 800 or something, and we say, okay, the market is interested in this concept.
Just for the uninitiated, I'm going to just interrupt and say Soren is talking about SEO. By the way, just he's talking about search volume. Just explain that concept a little bit, because obviously you know a lot about it. So just explain to the one guy out there who's got no idea.
Sure. And yeah, I guess we'll take a step back, and in a world full of acronyms, it can be frustrating to just have them flying around everywhere without them being defined. So search engine optimization is essentially analyzing what volumes of searches are present for certain concepts, certain topics, and then doing your best to identify opportunities and create content that aligns well with those searches and the intent of those searches, and then ultimately trying to rank, mostly on Google. I guess people still care about Bing, but trying to get into the top 3 spots so that you see a meaningful volume of traffic. And I think that, we in the SEO world, we talk about long tail opportunities. And so if you try to draw up a piece of educational content with a target of multifamily real estate investing, you're not going to have any luck, because many thousands of online content owners have put out content around multifamily investing. However, as a developer, say if your bread and butter is multifamily value add development, ground up development in Tucson, then maybe you've got something.
A little bit different. Yeah, exactly. It's very specific.
Right. It's very specific. Maybe there are only 50 or 75 people searching for that every month, but those 50 to 75 people, given the specificity of that term, are probably going to be very interested in it.
That's a very strong idea, isn't it? Yeah.
And really interested in what you have to say about it. So, not to go too far down an SEO rabbit hole, but
yeah.
Does that answer your question?
It does. And I'm going to tell you, I just did something very naughty on a live podcast call with a guest.
Did you
I opened a browser. I did. What a terrible thing to do. And I just looked at analytics for your website. And I noticed that you and I actually almost exactly the same. You got a better DR rating than me. We're looking at too technical, but I did want to share with you. I'm going to mention a few competitors, but that's only because I want to show off a bit. The top 5 competitors to equity multiple in search engine optimization rankings are, do you mind if I say it, even if they are your competitors? Number 1, CrowdStreet.
Wait, hold on. Can I take a guess first?
Yes, top 5.
All right. So
I just blew the first one.
CrowdStreet, Yield Street.
No, not showing.
Okay. Wow. That's 0 for 1. Pure Street.
No, but they should be, shouldn't they? That doesn't mean they're not a competitor. Just me. I'm talking SEO. I haven't run theirs. I don't know what their competitors are. It's very complicated. Strictly SEO. Who's doing as good a job as you are on education?
Well, I better quit while I'm behind.
Right. I'm going to tell you who they are. Number 1, CrowdStreet. I'm going to miss out number 2. Number 3, Realty Mogul. Number 4, Origin Investments. Number 5, GowerCrowd. Who's at number 2? He paused knowingly. GowerCrowd. Thank you and good night.
All right. Well,
anyway,
yeah, between now and next time we talk, we can have a little friendly SEO competition.
We should actually. It's a good thing. Yeah. You're definitely more nimble, I think, than we are. I kind of go for. I think you use the long tail. I like stuff that stays evergreen all the time. I'll tell you what I did, Soren, as soon as everything went on lockdown, I went into not only into a panic that all of my content was going to be outdated overnight, but also into a mad rush to replace it. So actually what I did, as soon as everything was like in March, everything went on lockdown, I switched off all of my content on social media from 10 posts a day on every channel off, all original content. And in just a few weeks, created massive amounts of content, all COVID related, all SEO focused, all COVID related, just to try and keep on top of that trend. And now I'm starting to switch it off again, thank goodness.
Did you have any wins? I mean, was that a successful strategy?
You know, it's funny. So what I really switched off was the social media for a while. I didn't want old podcast. I thought people are so hyper focused on, oh my goodness, the world is about to end, that they didn't really care about cat rates that much. So I kind of pushed that to one side and went for communication best practices, crisis communication, the impact on CMBS, a whole range of stuff like that. But you know what's actually stayed ahead has been, in terms of SEO, my site traffic has continued high because it's all coming from social media. A lot of it comes from social media. So I stayed on top of that trend on social. But from SEO perspective, it was just the deep knowledge content related to real estate that has stayed on top, frankly. How about you? Have you seen any wins in the last few months in that regard? Kind of timely wins?
You know, to be perfectly honest with you, we made that a focus, pretty immediately too. That was sort of a fever dream moment for us, realizing that we needed to have a strong POV and hopefully, see some SEO value out of, COVID related topics and where we go from here as an industry and what real estate markets will look like in 2021 and beyond. We haven't seen a ton of SEO value from that. However, I think some of the proxy data tells us that content is valuable to our investors. And I think that the main thing is that typical accredited individual just wants to know that you do have a POV on
point of view. POV for that one guy out there who doesn't know, point of view, POV. Continue.
Yes, another acronym.
POV on the SEO with the CTA.
Right. Of the COVID, yeah.
Exactly.
So yeah, I mean, I think that that falls more into the realm of your quote unquote thought leadership than traditional SEO. But just having a strategy and an idea of where the industry is headed, and in our case, how we're responding as far as our origination pipeline and what types of markets we're looking at, and so on and so forth.
Soren, I cannot believe how fast this call. I just noticed the time. Unbelievable. So let's, I really would love to continue talking about this, but let me jump into a couple. Let's kind of look forward in time, right? We've done some really good chats about SEO and best practices, etc. But before I ask you about where you think crowdfunding is going, do let me ask you, what is your role, if I may, at Equity Multiple as Chief Growth Officer? What keeps you busy during the day?
Yeah. So this may be more than you bargained for, but just sort of the backstory is Equity Multiple has been around for about 5 years. I was employee number 4, so been through all the trials and tribulations of a growing company in a new industry to boot. And really, I am tasked with growing demand for our product. So, attracting and building that network of accredited investors. So, in effect, I guess you could call me the CMO, the Chief Marketing Officer too, but I've eschewed that term because, to be honest, I wouldn't say that the term marketing is tainted necessarily, but I really don't view our path to growth as marketing. I view it more To borrow from our earlier points in our conversation, I view it as bringing investors the right kind of educational content at the right time and for the right person, and really just telling an honest story about our value proposition, what we offer to investors, and what the risks and the opportunities are in the space, and honestly trying to present some of the stories of our individual investors from across the country, and what sorts of assets they've gravitated to, why they're participating in private real estate investments in the first place, those kinds of things, and just really bringing the story to life.
The growth of crowdfunding. So you were number 4. Last I spoke to Equity Multiples, I had a very nice conversation with Charles some years ago. And so number 4. So how long have you been with the company?
It has been 5 years and 6 months.
Okay, good. So you've been all right. So you were number 4, but right at the very, very beginning. It wasn't Charles and Marius working for 3 years and then hiring.
Right.
All right. So let me ask you this. So 5.5 years ago is about when I discovered crowdfunding as well and approached it from a completely different angle, of course. A lot has changed. A lot
Indeed.
is happening now, and there are some very interesting trends. Tell me, what have been the biggest surprises to you, let's put it that way, of the growth of crowdfunding over the last 5.5 years? Where do you think we're headed in 2021?
Sure. I can speak mostly to our experience and our what we've learned about our investors, and what we've learned about what types of projects, what types of assets really sell. I think one of the biggest surprises from the outset, just looking at the demand side of the coin, so the typical profile of that accredited individual investor, is that in a lot of cases it is not a finance industry lifer who is interested in our product. Really the value that we're bringing to a lot of investors is access. And I think if you were to talk to any of the stakeholders from those other platforms that you mentioned that we compete with on SEO, I think they would say roughly the same thing. You find a lot of mid-career professionals in high income fields like doctors, like lawyers, tech executives, who know enough about real estate investing to be dangerous, but they're not, they're not super in the weeds on a day-to-day basis as far as real estate finance or investing. So, the value that we can bring is underwriting, is asset management, and again, it's providing educational content that really helps investors understand what types of real estate investments that are available in the real estate crowdfunding industry are going to be most appropriate for them. I think that as far as our growth strategy, educational content is going to continue to be a pillar of it. As far as trying to keep track of the questions you asked. So
I know it's not fair. I do like to ask double barrel. So let me actually ask this. Let me help you along a little bit here, because there's certain things I'm interested in, particularly deal size and sponsor size and caliber. How has that changed, and how do you think that's going to continue changing into the future?
Well, from my perspective, I think that the typical profile of deal, the sort of mid-market or sub-institutional space, has always been and will continue to be a sweet spot for the industry. So, that's the 5 million to 60 million total cap deal that may be overlooked by traditional capital sources.
So that's 2 to 20 million of equity. Is that the kind of scale of check that
Sure.
you're talking of scale?
Yeah. And it's in a lot of cases, it's going to be a great fit for the type of investors that that we have on the other side of the coin, on the demand side. Really wide breadth of risk return profiles. We offer senior debt, mezzanine debt, preferred equity, some fund structures as well. So, really the fit is there both for the demand side for that individual investor, as well as for developers and sponsors that play in that kind of mid-market size.
And have you seen that growing though? So have you seen it grow has that been a static scale for you for the last 5.5 years? Or has it been something that you've seen grow from 5 to 60? And where do you think it's going in 2021?
Yeah. I mean, to be perfectly honest, I mean, when we started in 2015, it was hard to drum up the demand to fund some of the slugs on the larger end of that spectrum. So we've definitely seen it grow. As far as where we're headed in the long term, I guess we'll just have to wait and see. But I think as the concept becomes more and more accepted by a wider demographic of investor, I think you could definitely see the high end of that bump up. I mean, I don't think that there's been a really comprehensive study of the size of the space anytime in the last few years, unless you've done one that I haven't seen. But just a rough guesstimate, I'd say between ourselves and some of the other major platforms in the space, maybe there's 10 to 20 billion in AUM, and the total size of the commercial real estate market in the U.S. is what, 15 trillion or something. So,
yes, exactly.
So plenty of room to run. Sorry, go ahead.
Barely scratching the surface.
Exactly. Yeah.
Just so you do know, I did the closest I've come to that. I have done some kind of ballpark estimates how much has been raised by crowdfunding platforms. Actually, is that public? Do you know how much? If you can tell me in total, how much equity have you guys raised in the 5.5 years? If that's public knowledge or public information, if not, it's totally fine, obviously.
Sure. It is, and I don't have the exact figure off the top of my head. It's just a shade under 200 million.
Incredible, isn't that? In equity, it's really extraordinary. So the closest I got was a review of reviews. I think I sent it to you. Did you respond to that? You saw that on the on LinkedIn, I think. My review of reviews. You guys came up with all the platforms, and there have been hundreds that have started in the last 5 years, and many of them have gone away. You guys are in the top 5. So you're one of the top players in the industry. It's really fantastic. So let me ask you this.
Flattered.
Huh?
We are flattered.
Don't be flattered. That's a review of reviews. That's all that is. That's the world telling you that. It should be right. That's it's good for you. It's always. I've always known that. I know your background and where you came from, because I worked with the Mission guys when I was during the last downturn, so I knew them as well.
Right.
Beforehand.
We appreciate you shining the light on it. Certainly.
I wish I could shine a brighter light. Send it out in your next email blast with a nice link to my website. That would shine a really nice light on it.
You got it.
So I'll hold you to that. All right, let me wrap up with 3 final questions. But before I do, I'm going to ask one final question before I ask you 3 final questions, and then we'll be done. Last question before my 3 final questions is, what are the challenges and opportunities for Equity Multiple do you see? What kind of the biggest challenge? What are you working on the hardest to overcome at the moment? Where do you think your biggest opportunities
are? So I'll turn a little bit to our product roadmap and our technology for the next year or so. I mean, one of the things that we've heard from many investors, frankly, some of the frustration with some of our investors is that if they commit to, say a $25,000 investment in whatever we may be offering, closing timelines can shift around, and potentially that money is sitting idle for a little while until we route it to the sponsor or developer. So one of the things that we have looked towards is some form of interest-bearing account where any of our investors can hold a balance within the platform, and they can earn some interest and then redeploy that when they're ready to. Obviously, we're going to be operating in a low interest rate environment for the foreseeable future. So one of the other things we're looking at is offering some form of short-term note that offers some form of flat return that's in between what you would see in a CD, for example, and the flat rate of return that we would offer through a senior debt investment. So to summarize that, it's offering a suite of products that are going to help our investors achieve a higher level of diversification and really put a greater volume of capital to work through our platform. So you could think about a parallel to that as like an M1 Finance or a Betterment or what some of the major robo advisors are doing these days.
Fascinating. All right, last three questions, because I can't, again, it's like flying by the time. Last three questions. And I asked this of all guests, and I mentioned it in the email. You see, eventually I'll create a book out of it and a series of podcasts alone on these questions. But here's the first one. What's the most important thing that somebody syndicating real estate online should keep in mind? It's like the most important thing they should be thinking about.
I hate to repeat myself, but I will go back to right where we started, which is just transparency and constant communication. Investors would rather hear, hey, everything is going as planned, than no news at all, and even would rather hear bad news than no news. So I think just keeping communication regular and at the outset letting investors know who you are and what your story is key to successful syndication.
Fantastic. Second question. Soren, this is more of a personal question, but what has been the hardest lesson you have learned? I like to ask hardest lesson in your online life, but in real estate is fine as well.
So I'll answer this more from a marketer's perspective, but I think it definitely holds true in the real estate world and the real estate crowdfunding space as well. It is very hard to take things back, and it's very easy to lose trust when you are operating in a mostly, if not purely, digital space. So if your world is communicating with and offering products to accredited investors, you're dealing with a demographic that does not suffer fools lightly. So if you come out with a newsletter that's segmented incorrectly, if you have a typo that's sitting on your homepage for a week, it may seem trivial, but if investors notice that, then, or a prospective investor notices that, I think that they are well within their rights to think, if you miss this, what else are you missing? Did you
get that number wrong?
Yeah, did you miss a zero on the pro forma somewhere? So, I would say just having I don't want to put any more anxiety into anyone than we're already experiencing these days, but much like you would with your underwriting and due diligence, make sure you're double and triple checking your digital communications as well.
I'm so glad that you said that, because you and I are on a completely different page with regard to that. I'm going to paraphrase what I think you just said. The smallest mistake can be your death knell. Whereas I say in the digital world, you know what? You're always going to make mistakes. Just just roll with them and correct it and just keep on moving. But I'm not contradicting you at all. I'm just, you know what, different perspective. But I think the idea that you can destroy trust very easily is a very important thing to be cognizant of, however that might be, and to preserve your reputation, right? Basically.
Yeah. I'm glad that you presented the counterpoint. I would argue that maybe both are philosophies that you can operate under. I mean, mistakes do happen, and I think that again, our investors appreciate the human element of our business, and it's sort of a parallel to bad news being better than no news. If you are perceived by investors as being forthright and straight talking, then certainly you have a little bit more leeway when mistakes do happen. So yes, I think double and triple check your work, but also don't beat yourself up too much about it, and your customers shouldn't either.
And eventually always hit the send button. That's the time when I hit that button. It's always the one that gives me the most angst, but I instantly look away and get on with something else because it's done. It's like, I can't dwell on that anymore. It's gone. And if I screwed up, I'll figure it out later. Now on to the next thing.
Yeah. I mean, there's the cliche quote that everyone loves from the great thinker Wayne Gretzky: "You miss 100% of the shots you don't take." Right. So if you never hit send, then obviously your marketing amounts to nothing. So
perfect. Last question. Let me ask you the last question. Another personal question, kind of. What are your key daily habits that make you successful online? What keeps you successful online personally?
This is maybe this could be too much of a window into my own brain, but one habit that I think has become more pronounced for me during the COVID times is to periodically just restart my machine. And, when the checkbox comes up, restore pages upon startup, I do not leave that checked. Because, in a, for a slightly ADD person in a world of high velocity information, I find that it's really useful to just restart not only my computer, but also my brain. And, you might have 40 tabs open, but when you restart your computer, you'll remember what the useful ones were. So, just kind of declutter, reset, and keep going with what's important.
Wow, that's very powerful, actually. That is something that we all see when you get a power out or an update, for heaven's sake. Bloody Microsoft update shuts down the computer and restarts it the next day and everything's gone. All right. Yeah. Well, actually, that's fine.
That's fine. I made a cup of coffee in the meantime, and
You know what? We'll start the day again. Soren Godbersen, Chief Growth Officer at Equity Multiple. What an enormous pleasure to meet you and to have you on my show. Thanks so much for showing up today and being here.
Dr. Gower, pleasure as always. Thank you for having me.
That was Soren Godbersen, Chief Growth Officer at Equity Multiple. So if you are a real estate professional and you want to find more investors so you can do more syndications and bigger deals and more deals, and you have a long-term perspective, go to GowerCrowd.com. Sign up for my newsletters over there. You will get a wealth of information about how exactly you can up your game and scale, essentially, your business, your syndication business, to capitalize on all the opportunities that are out there. Never walk away from a deal because you don't have enough equity, right? That's it. Thanks for listening. And thank you, Soren Godbersen, Chief Growth Officer at Equity Multiple, for your time with me today. I really enjoyed meeting you. I enjoyed our conversation very, very much. I look forward to having another non-recorded conversation at some point. All right? That's all for this episode. Thank you for joining me. I'll see you next time. And in the meantime, stay well. And for now, this is Dr. Adam Gower signing off.